Something is happening with XRP that the daily charts just aren't showing you. It's a story that isn't written in red and green candles, but in the quiet, relentless accumulation of billions of dollars by the biggest financial players on the planet. For a record-breaking 55 days, institutional money has been pouring into XRP, using a brand new investment tool that 99% of the market doesn't even know exists. This isn't just another ripple of speculation. It feels more like a tectonic shift in the financial landscape. For 55 consecutive days, the smartest money on Wall Street was methodically buying up XRP. Not in a panic, not in a frenzy, but with a calculated precision that signals a deep structural belief in its future. While most investors were glued to the price swinging up and down, a historic multi-billion-dollar rotation was happening in plain sight. This brings us to the most important question any XRP holder can ask right now. What do they know that you don't? In this video, I'm going to break down exactly how they're doing it, why they're doing it, and what it could mean for the future of your holdings for the last few months. The XRP community has been on a roller coaster. Prices have been all over the place, swinging between wild optimism and gut-wrenching fear. 1-minute headlines about geopolitical tensions are causing a market dip. The next, a single tweet sends everyone into a tailspin. Retail investors are often caught in this emotional whirlwind, selling at the exact moments of peak fear. In fact, on-chain data recently showed one of the biggest spikes in realized losses since 2022, as many just gave up and sold their positions. But while all of that was happening, a totally different story was unfolding in the corner offices of Wall Street. The institutional players, the pension funds, the asset managers, the endowments, they play a different game with a different set of rules. They aren't reacting to the daily noise. They're executing a long-term strategy built on fundamentals, infrastructure, and the regulatory clarity that finally arrived. This created a massive knowledge gap. On one side, you have the retail market driven by sentiment and short-term charts. On the other, you have institutional giants, quietly and systematically building a strategic position in what they see as a core piece of tomorrow's financial plumbing. They weren't just buying XRP. They were deploying capital through a revolutionary new vehicle, giving them unheard-of access and advantages. That 55-day buying streak wasn't an accident, it was a plan. And the heart of that plan is a tool that has completely rewritten the rules for XRP, the Spot XRP ETF. So, what is this brand new tool Wall Street is using? It's the Spot XRP Exchange Traded Fund, or ETF. If you're not familiar with ETFs, don't worry. The idea is actually pretty simple, and it's the key to understanding this whole institutional shift. Think of it this way. For years, if a major institution like a pension fund wanted to invest in XRP, it was a messy and risky process. They'd have to navigate crypto exchanges, deal with digital wallets and private keys, and jump through a mountain of compliance and security hoops. It was like trying to drive a semi-truck down a narrow, unpaved country road. Possible, but slow, inefficient, and full of risk. The Spot XRP ETF changes everything. It's like a brand new, multi-lane, regulated superhighway built just for institutional money. Instead of buying the digital asset directly, these huge firms can now buy shares of an ETF through their normal, trusted brokerage accounts, the same way they buy shares of Apple or an S&P 500 fund. Here's the breakdown. A massive regulated financial institution like Franklin Templeton or Grayscale creates a fund. They go out and buy billions of dollars worth of actual XRP and store it in secure, insured, institutional-grade custody with giants like Coinbase. Then, they issue shares for this fund, which get listed on traditional stock exchanges like the NYSE. When an institution buys a share of, say, the Franklin Templeton XRP ETF, ticker XRPZ, they're buying a claim on the underlying XRP held in that fund. The ETF handles all the messy parts, the buying, storing, and securing of the actual crypto. This simple, elegant solution has blown the doors wide open. It gives a familiar, regulated on-ramp to a class of investors that controls trillions of dollars. They don't have to sweat not your keys, not your coins, because that risk is managed by insured world-class custodians. This is the vehicle that made the 55-day secret possible. Understanding what asterisk an ETF is only half the battle. The real secret, the reason big money is flooding this way, is the why asterisk, and it comes down to two incredibly powerful motivators: tax efficiency and compliance. First, let's talk about taxes, specifically tax-advantaged growth. Let's talk about the proof, because this isn't just a theory. It's a documented fact. Starting in late 2025 and roaring into 2026, the new spot XRP ETFs went on an unprecedented run of positive inflows. For a historic 55 consecutive days, not a single dollar left these funds on a net basis. Billions poured in day after day without a single day of net outflows. To put that in perspective, neither the Bitcoin nor the Ethereum ETFs came close to a streak like that in their early days. While some Bitcoin and Ethereum funds were actually bleeding money, XRP ETFs were quietly soaking up over $1.3 billion in new capital. At one point, XRP ETFs were capturing nearly 50% of all new institutional money flowing into altcoin ETFs. Think about that. Half of every institutional dollar looking for a home outside of Bitcoin and Ethereum was going straight into XRP. This isn't hot money that jumps in and out of the market. This is sticky capital. This is institutional conviction. It's patient money making a long-term bet. Even as XRP's price bounced around, clinging to the $1.40 mark, these funds just kept buying. This leads us to the most critical part of this whole story, the coming XRP supply shock. That's not just a catchy phrase. It's basic economics. When you have a limited supply of an asset and introduce a new, massive, and relentless source of demand, the price has a powerful force pushing it in one direction. Here's what's happening. Every single dollar that flows into a spot XRP ETF has to be used to buy real XRP on the open market. That XRP is then taken off the market and locked away in a custodian's digital vault. It's removed from the circulating supply that's available for anyone else to buy. As of early 2026, XRP ETFs already control about 1.19% of the entire circulating supply, and that number grows with every single inflow. We have a pretty clear historical parallel for what happens next. When the spot Bitcoin ETFs launched, they created a similar dynamic. They became a black hole for Bitcoin, absorbing more coins each day than were being created. This relentless institutional buying was a primary driver behind Bitcoin's historic run. It created a massive supply squeeze, where there simply wasn't enough Bitcoin on exchanges to satisfy Wall Street's appetite. XRP is now in a similar position. The 55-day buying streak was just the opening act. We're seeing institutional demand compress supply from one side, while dedicated spot buyers are pulling their own tokens off exchanges on the other. The amount of XRP available on exchanges has been steadily dropping as it moves into cold storage and ETF vaults. Classic sign of accumulation, not short-term trading. When you have billions of dollars of sticky institutional capital systematically removing XRP from circulation every single week, you're setting the stage for a powerful price reaction. As the available supply on the market shrinks, even small increases in demand can have a huge impact on the price. This is the structural shift that most of the market is missing. The 55-day secret isn't just a sign of interest. It's the start of a fundamental reshaping of XRP's supply and demand. If you're starting to see the bigger picture and how the game has completely changed, do yourself a favor and hit that subscribe button and turn on notifications. The institutional story is just getting started, and you won't want to miss what comes next. So, what does all this mean for XRP's future price? The launch of these ETFs and the flood of institutional cash signals a graduation for XRP. It's moving from a speculative digital coin to a recognized piece of financial infrastructure. The conversation is shifting from just price hype to real-world utility and adoption, and analysts are taking notice. With the SEC case settled in August 2025, the path for institutional adoption is clearer than it's ever been. Price forecasts for 2026 are starting to reflect this new reality. Base case scenarios, assuming steady ETF flows and continued growth, put XRP somewhere in the $2.45 to $3.50 range. More bullish predictions, which factor in the growth of real-world asset tokenization and a potential supply squeeze from the ETF, see targets like $5.81 or even higher. Standard Chartered, a major bank, has set its own target of $2.80 for late 2026. Some AI models, looking at a perfect storm of positive events, have even projected a possible high of $14. These predictions aren't just pulled out of thin air. They're supported by real developments. The success of Ripple's stablecoin, RLUSD, and the growth of its on-demand liquidity business are creating real non-speculative demand for XRP as a bridge asset. Big policy wins, like the potential passage of the Clarity Act, could de-risk the asset even further for large institutions and unlock a whole new wave of capital. The main takeaway here is that institutions aren't buying XRP for a quick flip. They're buying it because they see its role in the future of payments, settlements, and tokenization. They see it as a piece of a diversified portfolio, like gold or tech stocks, that gives them exposure to the growth of the digital economy. That 55-day buying streak was a vote of confidence, not just in XRP's price, but in its long-term utility. Now, to keep a level head, we have to talk about the risks and downsides of XRP ETFs. Credible analysis means looking at both sides of the coin. While these products are powerful, they aren't perfect, and it's important to know what you're giving up. First and foremost, the fees. Every ETF charges an annual expense ratio. For XRP ETFs, this is typically between 0.19% and 0.75%. That might not sound like much, but over many years, those fees compound and can take a real bite out of your returns. That's a direct contrast to holding XRP yourself in a personal wallet, where the ongoing cost is zero. The second major drawback is the lack of true ownership. When you buy an ETF, you own shares in a fund. You don't actually own the underlying XRP. This means you can't use it for what it was designed, for making payments, using DeFi on the XRP ledger, or sending it across borders. You're basically just a passenger along for the price ride, not a participant in the actual network. You're also stuck with traditional market hours. The crypto market is open 24/7, but you can only buy and sell ETFs when the stock market is open. This can leave you exposed to big price moves that happen overnight or on weekends with no ability to react. Finally, and maybe most importantly, there's ETF-specific flow risk. Just like a 55-day streak of inflows was a powerful tailwind, a sustained period of outflows could slam the price in reverse. If institutional sentiment shifts and those funds start selling, it would put immense downward pressure on XRP's price. Your investment becomes tied not just to how people feel about XRP, but also to the buying and selling dynamics of the ETF itself. Understanding these risks isn't about being scared, it's about being smart. It's about knowing that ETFs are a fantastic tool, but they offer a specific kind of exposure with its own unique trade-offs. So, with all the pros and cons, what's the right move? An ETF or holding it yourself? The answer, for a lot of people, might not be either or, but a strategic mix of both. The XRP ETF is an incredible tool for passive, tax-advantaged exposure. It's perfect for retirement accounts like an IRA or 401k, where the goal is long-term hands-off growth with maximum tax efficiency. It's also great for anyone who wants exposure to XRP's price, but does want to deal with the technical side of self-custody and security. This is the institutional playbook: simple, compliant, and efficient. On the other hand, owning your XRP directly is for the long-term believer and the ecosystem user. Holding your own XRP in a taxable account is generally cheaper over the long run because you avoid those annual fees. More importantly, it gives you total control and utility. You can actually use your XRP for payments, tap into the growing DeFi and real-world asset projects on the ledger, and be a true part of the network's growth. This is the purist's path: real ownership and active participation. A powerful strategy could be using ETFs for your retirement accounts to capture that efficient, passive growth. At the same time, you could hold a separate stash in your own wallet for use in the ecosystem and for long-term holding. This hybrid model lets you get the best of both worlds: the institutional-grade access and tax benefits of the ETF, plus the sovereignty, utility, and cost-effectiveness of direct ownership. It's all about using the right tool for the right job to build a strong, diversified position. The 55-day streak is over, but its message is crystal clear. It was more than just a number. It was a signal, a declaration from Wall Street that XRP has arrived. The quiet, methodical accumulation of billions of dollars through these new ETFs has permanently changed the game. This is no longer just a market driven by retail traders. The biggest, most sophisticated financial players in the world are here, and they didn't show up for a quick trade. They are building a foundation. They are looking at XRP not as a speculative chip, but as a core piece of the future financial system. The knowledge gap between Wall Street and the average investor is closing. The secret is out. Wall Street isn't just testing the waters anymore, it's building the plumbing for a new era of finance. And with that, the institutional era of XRP has officially begun.